If I could only pick 5 stocks to run the wheel strategy on in June, these would be it. Yo, what is going on, premium chasers? I hope you are having a God blessed day. Today, every single person that comments down below is going to get our leveraged ETF playbook. And this one's going out to all of you degenerates that need to scratch that gambling itch when you are selling options. This leverage ETF playbook will tell you everything you need to know, especially with the risks on leverage ETFs. Just drop a comment down below and I'll personally send it over to you. And while you're down there, hit the like button, hit the subscribe button. Guys, today I'm bringing a heat for you guys. If I could only pick 5 stocks to run the wheel strategy on in June, these would be it, okay? And these aren't going to be the same old stocks that everybody talks about on YouTube, Nvidia, Tesla, AMD, SoFi, right? These are going to be a little bit different. And listen, some of you ain't going to like it because they're boring. Well, guess what? Boring scales, right? The sketchy, degenerate stuff that you've probably done in the past doesn't, okay? So let's go over it. First ticker is J&J, crowd favorite, at least in maybe in my world, but in this one, I've been mentioning it for the past couple weeks, especially on the YouTube channel in our private community. Lots of us were getting into cash secured puts on J&J when it was at these 146 levels, which did not last long, folks. You know, when you start building your watch list and this something weird happens, I swear to you, and I know it's all a fugazi, it's all BS, and like I'm the first one to tell you, nobody knows what a stock's going to do, but there's something about a gut feeling that you just start to build when you have your core watch list. J&J is one of my favorite stocks to run the wheel strategy on, right? Because of quad options, right? We collect cash secured put premiums, we're collecting cover call premiums, we're collecting dividends when we're running the cover calls as well, and then the appreciation sale when we eventually sell our shares. So when I saw J&J drop below the levels that it dropped, right, in April when the whole market tanked, I was like, this can't, like, in my opinion, again, I know it's all BS. We don't know what's going to do, but in my opinion, I was like, this can't not recover, right? Like, I know that's crazy to say. Obviously, read the shirt, not financial advice, but you start getting this weird gut feeling when you've been trading a certain handful of stocks for many years, where you're like, I can't see it. I cannot see this going much further below. And we reap the benefits of that, right? So if you see a pattern like this, right, in June or going into June or in June when you're watching this video, cash secured puts, right, the great part about them is when we see it drop below this bottom Bollinger Band, for the most part, it does recover. It could stay in there for a little bit like we saw in April, but then we see a decent recovery, right, that happens over the course of a month, right? So in this situation, right, if you did your cash secured puts on, April 7th here, you most likely were able to close those out here or expired in May 7th, right? So you expire, collected the full premium, or even like a week or two before, you might have been able to close out for capturing about 70-80% of your total premium, right? That's fantastic, right? And guess what? We saw the massive drop again, same exact pattern. Again, I'm not a pattern trader, anything like that. It's all BS. But you start kind of seeing similarities, and your gut feeling is usually honestly the gut. I'm calling it the gut indicator, right? Usually is a great indicator if you've been trading a stock for long periods of time. You start getting that kind of like gut feeling, right? And that's obviously on you to make that decision if you're gonna follow your gut feeling, right? Because they're not always right. But right here, I was like, okay, this thing is just drop down, in my opinion, over called for. Did it, and then hopefully closing out those positions here soon. I would love to see J&J honestly drop again. Premiums on this, obviously on stocks that are like dividend paying stocks like this, guys, that are kind of like boring blue chip stuff. They're not gonna. You guys, some of you are gonna be watching this, be like, I can't do this. Like it literally, I can't do it. It is not exciting enough for me. It's just not, and that's on you. That's totally cool. That is your decision. But for me, I don't mind wrapping up, $14,000, $15,000 of capital, make a decent return, and actually hope to get assigned. Most of you that are running the wheel strategy, you fear assignment. Why do you fear assignment? Why do you fear assignment? You picked a stock. Think about it. You picked a stock. You said you're willing to buy it at a certain price, and now you're running away of assignment, throwing your premium out the window, rolling it or whatever you're trying to do to save your trade. Why are you now not a believer in the stock? Well, it's probably because you don't understand anything about the business. You don't know anything about the stock, and you only got it from some YouTuber that told you, SoundHound was a great play. Like honestly, like that's just the reality of the situation. Let's all admit that. Okay. So for me, if I've got like 145 puts on J&J, I'm collecting an extra $100. Okay, it's not fantastic. I'm not telling you this is an incredible return for us, but I'm collecting about 0.68. If I'm like, you know what, that still is terrible for me. Like, I really don't want to do it, but I personally think even at these levels, J&J is good. Obviously, we saw a nice rebound, so these premiums aren't as nice as they were like a couple weeks ago. But even the 150s, I'm gonna go 150. I'm collecting about $200 in premium. Obviously, these numbers are constantly changing. Educational examples only, and all these calculators that you see, guys, on your screen, all this stuff is completely for free. Yes, it's free. Just join our free Facebook group, introduce yourself. All the templates and stuff are there for you to download. I want you guys to actually go use this stuff, okay? So we could see here, right, there's nothing great here right now in terms of premium because we're starting to work our way up with J&J towards covered call territory. And I'm curious to see how we're going to test these 200 and 300 day moving averages. So I'm watching this heavily, right? And this is why I say when you build your core watch list, like there's a lot into this. Like I'm analyzing this. This doesn't take me a ton of time by any means, but like I'm watching this. And if you're trying to do this across 100 stocks, if you're not doing this like as a full-time trader, like it's a pain in the butt. And most of us, we got other things that we're doing throughout the day, work, right? Whatever, projects, family time, et cetera, et cetera, et cetera, right? Listen, this channel, can I say it? This ain't for the young bucks out here that are like 18 years old, right? Trying to strike it big, becoming day traders full time. Like, bro, like that actually sounds like hell to me a little bit. Let's go on to the next one. Next one, I've mentioned this one before, and it is a cheaper stock, but Kraft Heinz is starting to really grow on me, guys. Kraft Heinz is really starting to grow on me at the levels that it's currently trading at. Listen, you guys know I love companies that have dividends. Kraft Heinz, right? You guys know I love, if you already don't know, companies that own hundreds of various brands that are like ingrained into our everyday lives, right? Kraft, Heinz, every single viewer of us has that. Like every single one has Kraft Heinz products in their house. That's like a good thing for me. So taking a look at their options chain here, again, they're going to be a little bit, they're not going to be terrible here, but let's go take a look. We're going to sell put. We'll go out about, 36 days here. Nothing crazy here. Let's look at the 25s, which I think is a great level. That's my opinion. Do your own research. Only a 0.19 delta, so about 20% chance of assignment, 80% chance of expiring worthless, collecting $26 of premium on that, locking up $2,500 in collateral here for about a 1% return. Not fantastic, right? But better than nothing, I guess, right? So in these cases, this is where I start looking at it. I'm like, okay, well, maybe I have to be a little bit more aggressive. Why is the premium so low, right? So in this case, I'm like, okay, well, the 26s, let's see what it's only a 0.32 delta. That's a lot more my style. Collecting 39 premium on that, but we're putting up $100 more in collateral, but we're getting a 1.5% return. Okay, in that case, I'm like, okay, maybe that's going to be something that I jump into. Okay. Now, watching Kraft Heinz here, right? The levels that we're at right now, we haven't seen in a very long time, guys. We haven't seen that. I mean, look, the lowest in the last 5 years, right? We have not seen Heinz. Okay. So this is why it's really piqued my interest. The more I've kind of jumped into this, even though the premiums might be low, I'm okay with that because I kind of want to get assigned here, right? Like I kind of do, because Kraft Heinz has not been at these levels in 5 years. I mean, when is the last time? I mean, it's like insane. What in 2019 around we hit around these levels, maybe around 2019, 2020 a little bit. So like for me, I'm like, okay, I like that. I like that. I do believe in Heinz long term. I believe in all the products long term. And you know what? For me, even if I get a little bit of a crappy premium return, it doesn't matter to me, because when I sell this thing, if I get assignment, like I'm gonna be happy. Okay, so that's for me is definitely a pretty big one on my watch list. Next one is Pepsi, guys. Big one, big favorite on the channel. I know a lot of you guys aren't big fans of Pepsi, but again, a stock similar to Kraft Heinz has a portfolio of massive amounts of products, and this thing has just been going really, really sideways here on us, guys. I mean, look at this, just completely just playing in that 130 area really for the past month here. So it's been set up nicely for cash secured puts here. Obviously, this is a much more expensive, quote unquote stock. Obviously, that's all relative to each and every single one of us. But the puts are still decent on Pepsi if we're going out. Let's stick to our 36-day one. The premiums are still decent. I mean, they're actually pretty dang good. I mean, even at the levels that it's on right now, like if we look at let's say the 130s, right? $300 in premium, that's still pretty good because of the levels that Pepsi is at. And what did I say there? 130. So we're putting up $13,000 of our collateral for a 2.31% return. We don't usually see a juiced up premium like that on stocks like Pepsi. So for me, I'm trying to look to take advantage of these of the kind of times that we're in with Pepsi right now. Look how far below the 200 and 300 day moving averages we are. Just getting absolutely beat up. Obviously, they're going to have to do a lot of stuff with a lot of their products, but that's all good things. If anybody can do it, Pepsi, Kraft, Heinz are ones to figure it out, in my opinion, okay? These are staple brands in our everyday lives that have thousands of products under their umbrella. I don't see them going anywhere. And again, another fantastic company for the quad options strategy. And the last one that I want to talk to you guys about today is Arista, okay? One of my absolute favorite wheel strategy stocks. And I continue to talk about this stock because this thing can move really fast. Now, this is definitely more speculative, more I would quote unquote for most people a high risk stock. For me and my risk profile and from my experiences in life, I don't consider Arista a high risk play for me anymore. I just don't. I have a firm belief in this company. I have an understanding, maybe not a super deep understanding, but I do have an understanding of their business model. I understand how they fit into the whole ecosystem and what their plays are. I'm not going to dive into all that right now, but you can see we're just below our 200 day moving average. When I was talking about this 2 months ago, we dropped down to that 65 level, able to close out and open covered calls along the way. But I'm hoping we see another big drop in Arista, and I'm going to be paying attention to it very heavily because I want to get into this more, right? This is a fantastic company, in my opinion, that the stock market cannot live without. And even at the levels that it's currently at, I mean, guys, it is still right well off its all-time highs of around that 130 price range. And we saw it just getting beat up. I mean, I think you guys know I talked about this one a lot since literally the start of this channel. All this year, and yeah, it makes you sweat, bro. I mean, the reality of the situation is when we're caught in a stock that's it was in this free fall pattern, and obviously what all went down in April, right? It's scary. But here's where I kind of challenge you, right? And it's so much easier said than done, but when you look at the fear and greed index, right? And this is simplest way. When we're over in greed and extreme greed, that is where we need to focus on cash secured puts and honestly aiming for assignment, right? Because when we aim for assignment, we're able to get better strike prices, get into companies at better prices, we're collecting amazing premiums as well. It's scary in the moment because we don't know what's going to happen, right? Everything is collapsing. Everybody's scared running around us. But now when you see it's oh, you wake up, new headline. Now we're in greed and extreme greed. Now is the time to unload, right? Unload all that ammunition that you loaded up on during the past few months, right? But a lot of people, and especially retail investors, aka dumb money, they call us, right? We aren't capable of doing that. So why do you think other people are capable of doing that you're not? Well, there's a reason why. And it's because they're high frequency trading companies. They're algorithms. These are algorithms that you're trading against that actually don't have emotion. Okay. And obviously part of the reason I love Arista Networks is they supply the lowest latency products, the fastest switches and products and networking gear for these high frequency trading companies. There's no emotion in there. Right. So us, as kind of we at the end of the day, we are retail investors, right? Keeping our emotions in check and having that firm belief in stocks that we did when they're hitting all-time highs, having that same belief on their way down. Guys, don't forget, drop a comment down below for the leveraged ETF playbook. I'll personally respond to you with that. And if you're somebody that wants a more handheld approach over the course of a year on building out your very own option selling portfolio, make sure to check out the 1-year-long incubator program. That link will be the first one in the description description of today's video. I do recommend giving option selling a year of time to really master. We don't trade a lot through the year, right? In my opinion, this fits into my lifestyle perfectly, doesn't take me away from all the other things that I want to do on a daily basis, but keeps me involved in the markets because I genuinely enjoy being involved in the market. So it takes about a year to be about to get into all the different kinds of situations and management and building that confidence. So if you want to learn more about that 1-year-long incubator program, click the link down below in the description of today's video. Guys, remember, sell options, collect premiums, repeat. I will see y'all tomorrow.